guys are ready, we're going to go ahead and get started. Thank you for coming out tonight. So this seminar is going to be divided into two parts. The first half is going to be about cryptocurrency, a general overview explaining what it is and how it works. And then the second half is going to be focused on some of the newest local regional scams that are going around in this area that once I start mentioning them, I'm sure several of you are going to say, yep, I saw that. And then we're going to end with just an overview of just how to look out, how to protect yourself, the different ways to report if something has happened and how to protect your identity and things like that. There are handouts on the table there. There are some dealing with the cryptocurrency, kind of explaining how it works, breaking it out. And then there is one that's very useful with a lot of the links and resources on how to report if anything happens online or with texting to you. And then just some general, the packets we always like to hand out about IRS, Medicare, Social Security fraud, anything like that, they are always ongoing. So we're gonna get started. I just wanna say, so I did a lot of research on cryptocurrency. I went to seminars the FBI put on and did a lot of research to understand it. I'm going to give you just a kind of a general layman's explanation of what it is and how it works. I do not have any information or advice on investing in it or anything like that. That you need to ask your bank or wealth management or anybody like that. But I just want to kind of explain to you what it is because I have had people come in here and inquire about it, and a lot of people are kind of wanting to start dipping their toes into the pool to invest in it, same as stocks. So we wanted to just kind of do a little bit on it, and then also make sure that if you are interested in investing in it, how you can stay safe with it. Okay, so hi. So I will tell you, the first little bit of this, some of it may seem a little repetitive. I'm going to discuss it, and then I have some graphics and graphs that I put in here because I'm a more of a visual person too, and it just kind of, I can tell you the information, but then kind of looking at how the things go, it seems to explain it, you know, it makes it a little bit clearer and easier to understand. So while we may have 2 or 3 slides that show the same thing, it just to give you like a really good understanding of it. So the first part that we're going to do is what is cryptocurrency. So the main thing you need to know is it is digital money. It exists only online. There are no cash, no bills, no coins. It is all digital transactions. It is not money or currency that you can see or hold. It is secured by cryptography, which is a very intense encryption that protects the transactions and verifies ownership. And I say this because if you invest in it and trade on the legitimate, legal, safe platforms, it is very secure. They do make sure that it is secure. Unfortunately, what we're going to touch on later is how you can get tricked into going on fake platforms. And another point of it is that it is decentralized. It is not controlled by any banks or government. It runs on a global network. So while that makes transactions from peer-to-peer go a lot quicker, and you don't have a third-party intermediary there, the problem is you also don't have insurance. Like your bank is insured through the FDIC and everything. There is no insurance or safety net with this like you have with currency running through a bank or with gold or something like that. And it is powered by what's called blockchain. Blockchain is a public ledger that reports all the transactions and is very difficult to alter. It is online, and when you do transactions in cryptocurrency, the transactions are then added as blocks into the blockchain. So like I said, it may seem a little repetitive, but just to explain it a little bit more in depth, what the digital money part means is, again, it exists only online, no physical currency. You can use it to send and receive payments over the internet. You can use it globally. There is no converting, like how when you travel, you have to convert your cash or money to that country's currency. So it is used globally. There is no conversion. It's stored in digital accounts that are called wallets. And if you invest, you have what's called your own digital wallet. So a simple way to kind of think about it is think about it like it's Venmo or Apple Pay. How you just tap or send that from person to person, but while Venmo or Apple Pay is secured by US dollars in your account, this is digital currency that is just, that's all it is. It's just online. There is no cash backing that. You deal strictly in the crypto. So it is secured by the cryptography. It's an advanced encryption that keeps the transaction secure. It helps verify that the person sending the money actually owns it. You have what is essentially like a passcode for it. You have like a 12 seed phrase it's called, and you have to verify your identity on the legitimate platforms to make sure that it is actually you doing the investing or the trading on it. And that does make it difficult on the legitimate platforms for it to be counterfeited or to double spend on it. So another way to look at it is every transaction is locked into a super secure digital safe that only the owner has the key to. So you only, on your digital wallet, you have the key to that. You keep that secure yourself. Well, that's a point, because if you do forget it and you can't get into your wallet, you don't get that money back. They cannot help you. Yeah, so that's a point that's going to come up. If you do forget it,
tech support.
There is no calling tech support. There is no calling the banks to help you. You are out of it. That's an issue. So yeah, remember your passcode. And again, that it's decentralized. So unlike traditional money, it's not controlled by a bank or government. It operates on a network of computers that operate all around the world. And there is no central authority, but that means there's less oversight and protection. So it's powered by blockchain. It's the digital record book or ledger that tracks every transaction. It's shared across many computers, not just stored in one place. Blockchain is shared around globally. Once a transaction is recorded on a legitimate platform, it's extremely difficult to change or delete. And this transparency helps to build trust within the system of cryptocurrency, the legal, legitimate system. An example is if you use Google Docs and you share it out with people in your group and you want to edit it, so everyone can go in and view and edit it, and each transaction is added there as a new line. It's not deleted. So you just see it's just constantly added to the blockchain. Nothing is deleted from there on the legitimate platforms. I keep saying that because then I'm going to get into telling you this can happen, but I want you to know if it's the real platform, it is secure and it is handled correctly. So I just have a graphic here, just a little bit on the 4 issues that we just talked about, just so that you just get a little bit of a visual on that. And then I have here just a bit of a table just to simplify the contrasting the traditional finance with the decentralized crypto. So the authority regarding both of those was traditional. It's centralized through governments around the world and the banks. Crypto is independent network consensus, decentralized. No government, no bank oversight. The form factor, of course, the traditional finance is physical paper bills and minted coins. Cryptocurrency is digital only in virtual spaces. And then the transaction intermediary is with traditional finance. It's required bank intermediaries and clearinghouses. Cryptocurrency is peer-to-peer direct transfer with no third party in between the transactions. And the record keeping, the difference is they both have a ledger, but with traditional finance, it's private or siloed ledgers, and with crypto, it's the blockchain, the shared digital ledger. So there's no actual, like the banks have individual ledgers, or software systems for companies have individual ledgers. This is all one large digital ledger that just keeps going. And this graphic just kind of shows it a little bit. You're the user. You have a digital wallet, which is where you store your crypto asset. These are the 3 main crypto coins: Bitcoin, Ethereum, and Tether. Once you do that, it runs through the blockchain network. It puts your information in of the deposit or the withdrawal that you did there, and then this is how it's used: peer-to-peer purchases online. It's used a lot also. The Ethereum is used a lot in gaming and apps, like in-game purchases and things like that. and global transfers because there's no conversion, and then people are starting to invest in it the same as you do with stocks, investment holdings. So it's just fully self-contained, digitally. They kind of have this as like, they put it as like an ecosystem to show you. And the value stored in wallets, secured by complex cryptography and routed globally without central bank intervention. So it's peer-to-peer, person-to-person. It's much quicker than going through the bank. Global transfers accepted all around the world and really, really used a lot in gaming and things like that. And then people are also investing in it and in their portfolios, same as they do with stocks. And this is just another graphic. This kind of breaks it out a little bit simpler on the making purchases. It kind of compares it to using PayPal, where you just use PayPal to make the purchases, but PayPal is backed by a bank. This is not. Here you transfer the money globally with no conversion, faster, very much faster than traditional bank wires, but you have a lot more risk. And investing, holding, buying, or selling coins like the Bitcoin, Ethereum, or Tether for potential market profit. So it's the same as stocks. You buy it in and you can sell it or trade it when it goes up, just the same as you do with stocks. And if they are on the legitimate platform, you're not going to see a huge, very large, out of this world increase and then all of a sudden crash out. Like I'll talk about some what they call altcoins that did that were not on the legitimate platform. These three, if you do want to invest, the Bitcoin, Ethereum, or Tether are the safest and most widely recognized to use if you want to start in cryptocurrency. And I think everybody, when they think of cryptocurrency, knows the word Bitcoin. So I'm going to break them out just a little bit, the big three, how they're represented and what they're used for. So the first one that everyone is familiar with is Bitcoin. It is kind of often it's compared to what they call digital gold. So you buy it and you hold on to it, hoping it will increase its value. So the good thing with Bitcoin is there's a limited amount, 21 million. 21 million is all that will ever be created in Bitcoin. So that way someone can't go in and create go in and create a large amount and inflate the price and then sell out from under you. So it is secure in the matter that 21 million is it. It's capped right there. And that's why people compare it to gold, that because it's capping it at 21 protects its value over time. So people think of that just as a safe haven for your savings. If you want to just invest and hold on to it, Bitcoin is the one that is recommended for that as an investment. It's like a digital version of gold that people invest in. Like my dad invests in gold, so investing in the Bitcoin is kind of the same thing, only on a digital level. The next one is called Ethereum, and that is more than just money for its value. Like Bitcoin is valued as money. It's an actual computing platform that lets people build apps and programs online. It's used for things, like I said, digital contracts, gaming, online marketplaces. It's used widely in online trading or for purchases. I mean, the gaming world is a huge world, and it's used like that. So Ethereum is based on smart contracts. So those are self-executing automated agreements stored in the blockchain, functioning like a digital if, when, then system rules. So they automatically enforce and execute actions. So just kind of imagine this scenario as how it works. So person A bets 1 Ethereum that it will rain, which is the condition. The smart contract is then connected to a weather API such as Oracle. If it rains, the code then automatically sends the 1 Ethereum that was bet to person A. If not, it sends it to person B without requiring a third party to manage the money. So it works on a smart contract. It's a little bit kind of like the casino, I guess, kind of, but it works on it. If this happens, then you get this, if or when this happens. And it just executes it itself based on the coding that is in the smart contract. And the simple kind of way to remember it is if Bitcoin is digital gold, Ethereum is like a digital toolbox for building things. A lot of people do use that when they're building gaming apps and things like that as well. So the third one is called Tether. So that's a type of cryptocurrency, and it's known as the stable coin. And it's known as the stable coin because it is designed to stay close to $1 at all times. For every one Tether in existence, there's a $1 US dollar sitting in a bank account to back it up. So Tether coins are backed by a reserve of assets held by Tether Limited, which are treasury bills, cash, and gold. When you buy a Tether coin with US dollars, they issue and create the new Tether tokens for you. When you return the Tether tokens, then they delete or burn the token and give you back the US dollars in trade. So it's always a fair trade that way. You give them dollars, they give you the new token, you want to return it, they burn it, so there's not an excess of tokens because then they give you back the US dollars to send it back to you. So that keeps it in balance. So the simple idea is it's like a digital dollar. That's very simple to use, and if you just kind of want to get into just starting and understanding without a big fluctuation before you go into Bitcoin, Tether is a good place to start. And some cryptocurrency goes up and down in value like investments, while others try to stay stable, but they all exist only online, and they do all come with risks. Even the Tether, there is no insurance or backed by banks or anything like that. It is backed by the private corporation of Tether Limited, so you're trusting them that they have $1 for each one.
And so there's no regulation on it, really?
So that's coming
Are
up
they
in
a
a little
public
bit.
company?
We're a private company,
Okay.
and there are some regulations I'm gonna hit on that have just come for the main three now. That they've now been classified as digital commodities, so there's a little bit more regulation on them, but like the altcoins, which I'll talk about too, do not have any. So they are slowly trying to make regulations to help protect the end consumer as much as they can. So now I put this in, this is a little confusing, it's confusing to me, mining cryptocurrency, but I put this in because I know when you mention cryptocurrency, and this is how it was acquired when it first started coming out, a lot of people would hear the term mining the cryptocurrency online. You didn't purchase the cryptocurrency, you mined it. So I'm gonna put this in, it is a little confusing, and I kind of broke it out, so hopefully it's a little bit better of an explanation. Like, you and I, us, we would purchase our cryptocurrency. We would not mine it, but it is important to understand it because that does affect the value of the cryptocurrency. It does affect how crypto comes out. And when people think of it, going back to the start, they do hear that it was mined a lot. So, like I said, we would probably mostly purchase it. It's based on your technical expertise, budget, and access to low-cost electricity, with buying or purchasing generally being safer for beginners and mining for the long-term high-capital investors. So buying provides instant ownership through the exchanges on the blockchain, while mining is an energy-intensive process that can be more profitable if operational costs are low. So purchasing or buying, you go via online exchanges, brokers, or apps. There are legitimate apps. The top three are Robinhood, Kraken, and Coinbase. They are legitimate apps that run on the legal platforms where you can purchase and trade cryptocurrency. They offer secure storage, and it allows you to buy fractional amounts for as little as $100. So you don't actually have to buy an entire Bitcoin. You can buy a piece of a Bitcoin. The same as people don't buy a whole bar of gold, they'll buy a part of the bar of gold. So the pros of purchasing are it's quick, simple, low technical barrier, and no infrastructure maintenance. Uses the exchanges like Coinbase or Kraken, or peer-to-peer. If you have someone that you trust and you guys trade, you can also go peer-to-peer to trade and invest your cryptocurrency, and then transfer it to your digital wallet. So it is best.
It's getting dark. You're getting,
Oh.
can't see.
Oh, you want to turn it on? Turn the light on?
You want to turn it
Yeah,
on?
sorry.
Okay. Sorry. I just noticed it. I was
We have
like,
people
"Oh,
online
thank
too, so I'm
you."
gonna see the slides, sorry. They can see me better.
Thank you. Sorry.
Thanks. So it's best for users looking for a direct, simple investment, like to add to your stock portfolio or investment portfolio. So what is cryptocurrency mining? So the simple explanation is it's how cryptocurrency transactions are verified and new coins are created. So powerful computers solve complex puzzles. This helps confirm transactions and the results are added to the blockchain, the digital record. The reward is the computer that solves the puzzle earns a small amount of cryptocurrency. So who actually comes up with new cryptocurrency? That would be developers, tech teams, crypto startup companies. They create the new coin and advertise it on platforms such as Discord or X or TikTok or somewhere like that, or LinkedIn, to be mined. They will put out there that they have created a new coin, a new section of the blockchain that's out to be found, and people will come in and mine it. And when they mine blocks of it, the blocks then get added to the blockchain. And if you're the first person to solve the complex coding and mathematical problems to unlock this block of cryptocurrency, your reward is then you get a certain portion of that block without actually having to trade US dollars for it. And so then what happens is thousands of computers, thousands of technical wizards are competing, and these machines are not just like your home-based computer. These are whole network server rooms and things like that. And they are just competing to solve these puzzles, and whoever gets it first, they get the reward of the crypto, and then the others try again when the next block or the next new coin is announced on the platforms. So just a little bit, so mining produces the new altcoins is generally what it does now, or the new altcoins or come out from that. So they use what's called a proof of work consensus mechanism, where miners solve the complex cryptographic puzzles, and that validates the transactions, and it secures the network, and then they receive the rewards in the form of some of the new coins after their work and the coins are verified and added to the public blockchain. It's very complicated, but if you are really good at it, or you have a lot of money to invest in these machines to do it, you don't have to exchange your US dollars to get cryptocurrency. Yeah, so the pros are its potential for much higher returns and direct acquisition of new coins, but the con is it's a high initial investment for software. It has high electricity costs, obviously, to run all of this equipment, and heat management. It's like we have a server room down here. It has to be kept at a certain temperature. It cannot go above 70 degrees. And it requires specialized machines, which can run anywhere from $3,000 to $10,000 per unit. And just think, if you're very serious about mining this and really want to be in the competition, you have a lot of these machines working together to solve these puzzles. But I did want to bring that up just because I know, when you think of cryptocurrency, you go, oh, I've heard about mining. What is that like? So, and I will say also, I don't know if any of you watched The Big Bang Theory, but in the final season, they had early on mined a bunch of cryptocurrency when it first came out. And they had saved it on someone's computer, one of their computers. Well, the computer got lost. It was a whole thing going around. And they wound up losing they had actually put on a USB after it was on the laptop, and they wound up losing that USB that had all the information for this amount of crypto that they had mined, which would actually have been worth thousands of dollars, and they were out. Didn't matter. They didn't have the information. They didn't have the USB. They thought they had it for years. They're ready to cash it out. Gone. And that was kind of on a sitcom, but that actually does happen. That's the important thing of don't lose your wallet where it is stored. And don't lock yourself out of your wallet either, because they will not help you. So here, just kind of a little bit, just to break it out a little bit, a comparison summary. So I can't see my small print with my glasses on the paper. So if you're buying, you purchase crypto like it's an investment. Mining is earning crypto using computers. It doesn't cost you money to purchase the crypto, but it costs you money to purchase the equipment to begin the mining process. So I'm trying to look at it, whichever way you want. Buying is simple, easy to start, pretty much the same as investing in stocks. Mining requires the equipment and the setup. There's no special technical skills needed to buy. Mining is more complex and technical. Shockingly, you do need to have some coding background, but really you need to have more mathematical background for these, to program these machines, because the puzzles are very much based in mathematics. Buying is, of course, lower upfront costs. You're just purchasing the amount that you want. And mining is the high cost to purchase the equipment and maintain it with the electricity and the heat and everything like that. So buying is more straightforward. Mining is more complicated. It just depends on how much you have available to spend on it. So the key difference is profitability. Buying depends on the market price, so you do just as stocks. You purchase the cryptocurrency at the price it is on this day, and really in this block of hours, because it can change within a few hours. Mining depends on your electricity and equipment because it has not hit the blockchain yet. You're mining it, you're finding it, and then it hits the blockchain. So your profitability is, if you're doing it for a long time, then obviously your cost goes down because you pay for the equipment, but upfront it's a higher cost to start. Strategy is invest and hold, and buying the same as stocks. Mining is earn small amounts over time, but you don't have to pay for them. Risk, buying is lower risk, mining is a higher risk, and your equipment also loses value and gets slower. Obviously, we all know with technology, it continues to evolve and become quicker and quicker, so the equipment you may have bought 5 years ago is not going to solve those puzzles as fast as the equipment that someone just bought last year. Bottom line is buying is simpler, mining is more complex, costly, and riskier for most people. Really, if you are in a technology, wizard or something like that, or in a group, then you should mine. If you're an individual investor, you really should just kind of start with buying, unless you're just some kind of technical genius, which I am not. I would buy. So now, I hope that kind of explains a little bit of what it is and how it works on the legitimate platform, the legal way to do it, the good way. Now we're going to go to why you need to be careful. That's always the fun part. Kind of three main points are there can be huge daily price swings of 10 to 20%, and depending on the coin. It can actually even be more than daily price swing. It can be within a block of hours that it could swing. So, the amount can swing quite a bit. There are no transaction reversals. If you send it to the wrong wallet, if you get scammed and they clean out your wallet, or if you send it to a dead network, a dead address, you're out. You cannot recoup it. You cannot get it back. There is no insurance. There's no one to hold your hand. There is no stop payment, freeze account, anything like that. So, and also if you lose your passcode, you can't get into your wallet, then it's dead crypto. It's sitting there, you can't access it. And there is zero protection in money. There is no FDIC insurance as in banks. So if it crashes, you're not insured for anything. You're not going to get, like if a bank folds, you're not going to get your money that you had under $250,000 to then invest in another bank. You are done, unfortunately. So it does have extreme volatility. Unlike stocks, which may move 1 to 2% a day, crypto can swing 10 to 20% in hours. In 2025 to 2026, even stable years may see massive dispersion. Bitcoin stabilized around 90 to 95,000 in early 2026. Many altcoins, which are the offshoot of coins that you see from the new mining on the chains, like Solana is one that they use here, experienced drawdowns of over 30% in a single quarter. And a big reason why some of the altcoins experience big drawdowns is they are pushed out by celebrities and influencers, and people go on with a big buy. Oh my God, my favorite celebrity is pushing this cryptocurrency. I have to have it. And then it just kind of sits there. The hype dies down, and it's not really used like Ethereum is used in gaming and online platforms. Bitcoin is used in investment because it's similar to gold. it just kind of sits there not doing anything and not really serving a purpose other than it made that celebrity or influencer a big chunk of change for promoting it when you went out and purchased it. So the high volatility can trigger liquidation for traders, wiping out accounts instantly, and that has happened too. They can crash so hard, or the major investors will sell out and get out, and that leaves you with nothing. Irreversibility is the no undo rule. If you send funds to the wrong wallet or dead network, those assets are gone forever. There's no reversal or chargeback department. Hackers often use what's called a wallet drainer, which we're going to talk about later. One wrong click on a link can empty your entire digital vault in seconds with no way to get it back. The same as if we talked about before, you get an email from your bank saying there's a problem with your account. Click this link, that gives them access to your account and they will clean out your account. It works the same way, just think of it that way. So never click a link. Never click a link that you don't recognize. So there's no FDIC insurance. Your local bank account is insured up to $250,000 by the FDIC. Crypto exchanges are not insured. If a platform fails, and the example is the Bybit hack of 2025, where hackers got into the Bybit and stole 1.5 billion in cryptocurrency. So users, you and I, are unsecured creditors, which means we're the last in line to get any of the remaining money that was left back. It's going to go to the top investors first and then trickle down. Private insurance. So some platforms now offer private insurance, but it rarely covers individual hacks or lost keys or passcodes to get into it. They kind of just do that to make themselves appear more legitimate, but in reality, you're still kind of screwed. It's really not going to help you in the end, because most times when you lose it through hacking or not being able to get into your wallet. So we have some regulatory gray areas. In March 17th, 2026, the Securities Exchange Commission and the Commodity Futures Trading Commission joint guidance classified finally Bitcoin and Ethereum as digital commodities. So that provides more legal clarity for U.S. investors, provides a little bit more regulation on that, on those two, just on those two. So despite this, many unregistered exchanges still operate offshore. That's a big thing. The platforms that are not the secure, legitimate platforms operate offshore the same way as people who come in and hack your accounts. They're calling you from a call center offshore in another country. They're not here. They don't face legal consequences. And furthermore, it's that the Genius Act of 2025 only strictly regulates permitted stable coins, which are the top three. Many other tokens remain in the legal wait and see zone. The altcoins are not covered by that. They have not proven themselves like the top three have. So here's what we're going to start here on how, if you are investing in it, you have some, or if you're thinking about it, how you personally can get affected by a hack. So it's called the long con, and believe me, they take their time with this. And when I start talking about, you'll recognize it as we talked about before, the cons where you on Facebook or somewhere where you strike up a friendship or something with someone, and then they're like, hey, I need to pay my rent. Can you send me $1,000 or something like that? It runs the same way. So it starts with the grooming phase, what they call. They don't ask for the money immediately. They spend weeks to months building your friendship or relationship over text, WhatsApp, LinkedIn, Facebook, anything like that, making you think, and a lot of times you're not even talking to a real person. You're talking to people working out of those call centers offshore. You're not talking to John from Wisconsin. You're talking to someone in a foreign country that's sitting in a big room with a bunch of computers and cell phones, just making these calls and going into these accounts online to reach people. So once they've established a relationship with you, they go into what's called the insider pitch. They casually will just mention to you, hey, guess what? I didn't want to tell you this until I thought we were real friends, but I made a fortune in crypto, and I'd like to teach you as a favor how you can do it. Yeah, that's not going to happen. So then the fake platform, that's what happens if you accept that offer of wonderful, hey, great. They're going to lead you to fake platforms. It's the same as if you're taken to a fake website that you think is from your bank or from Visa or something. It's a professional looking site and platform or app that they actually control. They control it. It is not controlled on the blockchain. It looks like the real exchange, but it's complete fabrication. They have modeled it and mirrored it to look exactly the same, but they're the only ones that control it. It's not actually out on the public blockchain. They control it themselves. But you can't tell the difference. Then they come in with the illusion of profit. So you're going to get fake price fluctuations. So while cryptocurrency does fluctuate in reality on the blockchain, the scammer will come in and manually change the numbers on your screen on that fake platform that you're seeing that you think is the public exchange. They'll show your investment, say you put in $1,000 with them, that it all of a sudden turned into $5,000 in a week. That's amazing, and that's going to trigger your what they call FOMO, fear of missing out, if you don't invest more. You know, they've got you thinking, oh my God, this is a quick get rich scheme. I'm going to try one more time, and I'm going to cash out, and I'm going to have made a fortune with only spending $1,000. So then what they do is they do what's called the trust building withdrawal. To prove that the site is real, they're going to let you withdraw a small amount, usually between $100 and $200, back to your actual bank account. And what this happens is then you feel safe. You feel like, well, they let me take my money back out, some of it. I'm going to give them a whole lot more. Why not? Why not? They're not, you know, this is legitimate. I got this money put back in my account. And unfortunately, the gentleman from the FBI said that he had run into several instances where people lost their entire life savings to this, based on just getting back maybe $500 total from the small withdrawal amounts. So then what they call the final blow, once you deposit a large sum, trap shuts. So you're in there now. Your money's in their wallet, in their exchange. You can't touch it. So then when you come to make another withdrawal to get back your investment, you've made enough, you think this is great, this helped me out, I'm set now, I want to withdraw this out. They're going to come to you and tell you, well, wait, hold up. You got to pay 20% IRS tax or service fees up front. So then, if you actually pay that, they try and figure you out. If they think you're on the hook, they're going to tell you, oh, no, another fee, sorry, happened again, this changed, oh, I want you to withdraw this money, but you got to give me this much more. And this is not money that you already put into invested. This is more money from your bank account that you're giving them on top of the investment. If they think after the initial 20% in service fee that you might be wavering and kind of figuring out that they're, you know, tricky, they shut down. The site disappears. It goes to the phone number's no good. The email goes to a dead server. Done. Either way, that happens either if they only get you that one time or if they think they can get you with a few more fees. And again, the gentleman from the FBI said he ran into that and he said it was just awful. You know, he gave an instance, they were actually alerted from someone's family member that this happened to them. And he went to the house. He went to the person's house to try to explain to them, stop paying them these fees. Like, you've already lost this money, but stop giving them more. And the person actually got angry with the FBI agent and said he was a scammer. And he's in her house with his identification trying to explain to her, ma'am, I'm trying to help you. I can't help you recoup what's gone, but I'm trying to help you from giving them more. And she got very angry because she was so invested. This person was her friend. This person cared about her. And she was going to get this money out. How dare he come in and try and steal it from her? Finally, they convinced her, and unfortunately, she lost quite a bit of money. But yeah, he told that story. That was just shocking that he actually came there with all his credentials, and the woman thought he was the scammer and got very angry with him. So unfortunately, that happens. So here, just have a little bit of a graphic. Again, I'm kind of a visual person. You get the contact on social media, generally. Sometimes it can be like a wrong text message, and then they'll start up a conversation. Oh, you seem like a nice person. I'm sorry I sent you the wrong text message, but hey, you seem nice. You know, kind of just establish a friendship, kind of something with you. Then they talk to you about your hobbies, about things you like, you know, on some level building a romantic relationship, and again, it's what's called catfishing. You're not seeing the actual pictures of them. It's not real. They're pulling it from stock photos. It is not real. Watch that MTV show Catfish. You'd be amazed. Stage 3 is where they pitch to you where, well, now that we're such good friends, I want to share with you how I made this much money, and out of the goodness of my heart, I'm going to teach you. And you believe them because you think, hey, you think you have a relationship. So then they take you to the fake platform that they have created that does look very much like a real exchange. They get you to invest some money, then they let you withdraw the $100 to $200 with no fees attached at that time. And then after that, they get you to invest more money. Then when you want to do the withdrawal, they hit you with the fees and the taxes and everything, and then they shut it down. It is like it never existed, and your money's gone. So scammers use trust, excitement, fear of missing out, and always remember, if it sounds too good to be true, especially in crypto, it almost always is too good to be true. But that's kind of the same. You can also use this. It's the same as I've talked about, where you meet someone on social media and become friends, and then they ask you, hey, I need to pay my rent. Can you send me something? Or the worst one is, hey, I was notified by my bank. My bank got hacked. They said I have to move my money out of my account. Can I put some in your account to keep it safe? Sure. Then they have your account information. They clean your account out. Or, hey, I think it's great. I really want to move here and meet you and do stuff. Let's start up a joint account. And let's both put money in. And then they take the money and shut the account down. So just think of it, it's the same, it applies in both things, unfortunately. They use the same con there on that. So here, just a little bit, again, just a little bit of a graph. And I think this graph is actually on the table as well. A safety net feature, your traditional bank is insured up to $250,000. Crypto wallet is zero insurance. Gone, lose your password, get hacked, send it to the wrong place, you don't get it back, there's no stop payment on that. Error handling is reversible. Fraudulent charges or wrong wires can often be brought back to a bank. They'll do the stop payment, or they'll actually, and a lot of times you go to a bank and they'll say, are you sure you really want to wire this $10,000 to this person, ma'am? And sometimes they'll call the police. The teller will call the police to come to speak to the person, to say, let's think about this. Crypto transactions are one way. There's no undo or help desk to help you with that. The traditional bank is stable. Value of a dollar remains a dollar. $10 bill is worth $10. $5 bill is worth $5. Crypto prices can drop 10 to 20% in a day. Regulation on banks, they're strictly supervised. They follow rigorous federal reporting laws. Crypto, major tokens are digital commodities, the Ethereum and the Bitcoin, with some regulation now starting. Altcoins are still risky. They are not covered under that. And then access with the bank is permission-based. The bank can freeze your account for suspicious activity if they think something's going wrong with it. You can also, if you have had problems with identity theft, you can put an alert on your account through your bank through checks, CHEX, and I actually have it where you let your bank know these are the monthly payments that go out, your bills that go out to your creditors or whatever. And then if you have something that comes through different, they contact you to get permission before they send it through, because you've alerted them that there has been an identity theft done to you before, which is, all this stuff to protect you can be kind of a pain if you need to get credit or you need to do something, but it does really protect you and help you in the long run. And then here, with crypto, you have 24/7 access, but you're 100% responsible for security. Nobody's going to help you. You're responsible for it. So, on the legitimate site, it's good, but unfortunately, like if you're new to it or just a small investor, you can very easily get lured to a fake platform or lose your password. So the next thing is, why Bitcoin? That's the scammer's favorite brand, because most people, I would probably guess here too, you hear cryptocurrency, you think Bitcoin. Don't even call it cryptocurrency. People just call it Bitcoin. They just call it Bitcoin, like that's the whole thing, because that's what you know of. So it's universal brand recognition. It's a household name. And scammers use that by making their fake investment opportunity feel more legit and established rather than experimental, because everybody knows Bitcoin, whether you invest in it or just have heard of it or seen it on TV. And honestly, like if you've ever had your computer, you've gone to a virus infected site and you get that sign, that's the screen that pops up, tech help, tech help, tech help. Send us Bitcoin and we will help you. Any of that, it all runs off Bitcoin. So that they use the high price there. Bitcoin's pretty stable, it stays up at a pretty good rate, and they use that to work on you feel like you're missing out on something. Here's something that I did not know. So we don't have them anywhere here. I don't even know if there's one in the state of Virginia, but in larger cities, there are what's called Bitcoin ATMs. They are not at banks. They are located at gas stations, pharmacies, convenience stores, things like that. So there are over 40,000 of them globally. I had no idea. So let me tell you how this works. So scammers will often send the victim to the physical kiosk at the gas station or pharmacy, and then they'll get you to turn your bank protected cash into a digital code, and that wallet, it doesn't go to you, it goes to them. So I looked up exactly how it works. So if you go to a Bitcoin ATM, and some of them are legitimate, you can do it, they are legitimate, but scammers use them as well. You enter in your phone number or scan your ID to verify who you are in the system. Then you scan your mobile cryptocurrency wallet QR code that's on your phone. You scan that on the screen to the machine. Then you insert cash or your debit or credit card, just like you would do at a regular ATM, like insert that. And then to take out however much of the crypto you want, you confirm the transaction, just the same way you do at a regular ATM. You sure you want to take out $20, and you verify that it has then been uploaded to the blockchain. You get confirmation. Transfer that block is now in your digital wallet. So if you're using this on your own and it's legitimate, that block's going to show up in your digital wallet. If a hacker or scammer sends you there, that's going to wind up in theirs because they've manipulated the QR code for you and they've got it sent to them. So again, there's no middleman to stop. There's no like a wire transfer like I just talked about where a bank teller will say, are you sure you really want to send this $10,000? There's no human filter on a Bitcoin or cryptocurrency transaction. Speed is a big thing why people use cryptocurrency, because there is no third person or middleman intermediary. Transactions are settled globally in 10 to 60 minutes. Wire transfers, can take up to a day or more. This is done in less than an hour to send the money back and forth. And then once the scammer sees confirmation on the blockchain, their money is theirs, and you can report it to the police, but they can't do anything with it. It's gone. And then you have the tech confusion shield that scammers use. They do know that most people, first time early investors, don't fully understand how Bitcoin and other crypto works exactly. And so they'll use a lot of the technical jargon to try and confuse you so that when you run into an error or a tax fee or a service fee, you think it's a technical requirement that they can convince you of the blockchain to access your cryptocurrency, and instead it's a lie, and they're just trying to confuse you to push you. The same as if you get a call on the phone saying you got a warrant out for your arrest, you haven't paid this bill, and they get very belligerent with you, and you have to pay me a Google Play card or an Apple card or something right away, and they're very belligerent on the phone. Think of it that way. We've all had those people on the phone. Did a balloon just pop? Oh.
I hit it.
Oh. We're waiting on those balloons to pop almost here. So just think of it that way. We've all had those, and we've talked about them, those phone calls where the people are just rude and talk fast and just very belligerent and just make you very uncomfortable. That's the same way this is with the technical jargon. It just puts you in a headspin so you don't know what to do. And so just remember, just because someone mentions Bitcoin does not mean that it's safe. It's just like a scammer is asking for a wire transfer is a red flag. The scammer asking for Bitcoin is that same red flag that's wrapped in a more high-tech label. So the same as if you need to be careful if someone, that you've gotten to know online wants you to send them a wire transfer to help them. Just be careful if they want you to work with the Bitcoin with them on here.
I've seen a Bitcoin ATM, and it was at a gas station quickie mart.
Uh-huh,
Bitcoin ATMs aren't really, they're one-way ATMs.
Right.
You can put money in,
yeah.
but you can't get cash back.
No, yeah, you get the
You can
block in your
transfer it to
digital
a wallet,
Yeah.
but that's
You
it.
don't get cash back. You put cash in and you get the
It's
block
a
out.
one-way ATM.
Yeah. Yeah, physical cash one
It's
way, yeah.
So it's a little bit of a misnomer kind of a thing, because you think of getting cash.
You think, yeah, and it's actually, it's just the block, and if it's not the legitimate, that amount is not going into your wallet.
It was in Delaware too.
Oh, okay. When I was researching this, I saw that. I never heard of it. I know there's none around here, and I was just kind of
I've
surprised.
never seen anyone anywhere else. It was
Yeah.
in Delaware.
Okay.
It was in a big town, yeah.
Wow.
It was just on this seedy little,
Yeah.
strip mall thing.
I say they're kind of like the red box movie things that you see there, just sitting there.
Yeah.
So this is a little bit on just the explanation on how the scammers and hackers target you. And as I go through these, there's four. You will probably see a lot of parallels if you come to any of these seminars I've had before on online, how you get scammed with just online, how you can get reeled in. So the first one is phishing and what they call wallet drainers. So you're going to receive that official email. So you receive an urgent alert from mimicking Coinbase, OpenSea, MetaMask. These are the apps for cryptocurrency, the same as you would receive the urgent alert from your bank or from Visa or somewhere like that, that your account is compromised or you need to verify your recovery phrase. Same as if you get the text or the email from your bank saying, you need to verify, click this link to verify your password so we can make sure your account's not compromised. So here, where it differs is traditional phishing, they want your password to gain access to your account. You have a little bit of time there when someone tells you, it probably wasn't legitimate, you know that was going around, to kind of take care of that. They use wallet drainers. They convince you to connect your wallet to a fake site. So you think you're logging in for them to verify that it's not corrupt, but in seconds, they have moved and emptied your wallet into their own account. There is no like time in between for you to be like, oh, wait a minute, maybe I should change my password again because that probably wasn't legitimate and I don't want them in my account. So the result is your wallet's emptied in seconds, and the blockchain is decentralized. There's no reversing the transaction. There's no oversight to protect you. The next one has a lovely name called the Pig Butchering Long Con. It's a really lovely name. So they come up with these terms. It starts with the wrong number, text, or message from someone attractive and successful, because why not? Of course. And they spend weeks and months discussing your life, hobbies, and all that with you because, hey, you're just that lucky. You're just that lucky. And they casually mention that they have an uncle or an expert analysis or friend who helps them make 20% weekly returns on a specific fake crypto trading platform, which is a platform they're going to take you to that you think looks real. So they encourage you to start small. You'll see the profits on the screen, which they are physically, manually manipulating from that center offshore, and they'll let you withdraw the small amounts to prove it's safe. Once you deposit the large amount, which they call the fattening, to go with the pig butchering thing, they vanish and demand the taxes and then vanish before they let you see your money again, but you're actually never going to see the money again, like we talked about. That's just a lovely name they gave that, to add insult to injury.
What's the silver-looking coin? I don't know. Bitcoin. That's their fake branding coin,
Right.
which doesn't really exist. It's just but what's the silver one? Is that Ethereum or something?
I think it is.
Stable coin.
It's not photo off Google, but I do think it is, because that is what most people use on the graphics, are those two.
Yeah.
Because the Bitcoin is most widely used for consumer, and Ethereum is used in the huge online gaming platform. Think of like Call of Duty and the things like that where you purchase within.
Yeah, the Bitcoin thing, that's just a graphic.
Yeah, there's no actual coin.
There's no actual
coin. That's the thing. There's
Right.
no coin. And also, just a little bit of a side note, because I ran this through one of our library assistants, Susanna, to get her opinion and have her ask questions, and we kind of went down a little bit of a rabbit hole. No one actually knows who invented cryptocurrency. That's another thing. It's anonymous. They've given the person or group of persons, they have a name, but they don't know if it's one person or a group of persons. It's never been proven who actually came up with this, which just blew my mind, that it's based on a whole thing. We don't even know who started it. We kind of went down the rabbit hole after we looked at it, because we do that sometimes.
Someone who knew a lot about cryptography.
Exactly, but it's just
They're
shocking
really
to me
technically competent. But
that so many people are just like, hey, great, I don't know who you are, but I'm gonna go with it.
yeah.
So then we have, and bear with me, I have a couple more notes on this because this deals with the altcoin. I have my notes written here, so bear with me, see if I can read them. So the rug pulls, that's called the rug pull is the hype new coins that are pushed by influencers and celebrities. So the most well-known of that is going to be the Doge coin, D-O-G-E. That was based on a popular 2010 meme of a dog, a Japanese dog, whose photos became memes and were widely distributed. And it is just based on that. It is actually quite successful still. What it became, it started based on a meme of a dog. People bought into it, but it has maintained its stability. So that is one of the altcoins that is actually still profitable to this day, surprisingly. So why it generally doesn't work is thousands of people buy in with the hype, the liquidity pool, the pot of money that allows the trading grows. Then once the price hits a peak, the developers who hold the majority of supplies sell everything all at once. I again liken that to a few years ago, if you remember the GameStop, the big GameStop stock purchase. Everybody went out and bought GameStop stock for like a week, and then the investors pulled out, and everybody, I know people who just lost money on that, and I'm looking at some of them going, really, what, you really bought into that GameStop? They haven't been active in a while, but okay. So they delete their social media accounts, they delete the website, delete the platforms, and the investors are holding nothing. So a couple of examples of these hype coins were the Ethereum Max. That was pushed by Kim Kardashian. It was actually very popular when it first came out. It is now worthless. It has a zero trading volume, and Kim Kardashian was fined $1.26 million by the SEC for her participation in this. Another one is called Dink Doink by Logan Paul, who for some reason is a very popular influencer. I don't understand the appeal, but that was a major rug pull. Chandra's laughing at me, but I mean, come on, y'all seen them. Very failed, no value. It is not traded anymore on reputable sites. Now, one here that is considered a top tier active, really, and has been compared to Doge, is Cardano, which was pushed out and hyped by Gene Simmons of Kiss. So, it's a top tier active one. Now, it is used with smart contracts. It is used on gaming and app, and it is used to purchase digital art and collectibles. And a lot of that, you'll know, the term is called NFT, non-fungible tokens are a big thing. And so actually the Cardano is still very popular, still very reputable and active. It is used mainly in the online realm with the smart contracts that way. But sometimes they are legitimate. I looked up some more. There were some that were backed by legit, Celebrities You Trust, Jimmy Fallon backed one. It is still there. It is like...
How about the Trump coin? It's Trump coin, the Melania coin.
Yeah. I was going to stay away from anything political. But like, so Jimmy Fallon is like a really trusted late night host. That's kind of worthless. One actually was bought in by the R&B singer Akon, called some of the Akon coin or something. He actually sold that under the premise of he was going to build an ecosystem in his home, on where he was from, in his homeland, and help the environment and everything like that. And people bought into it thinking it was going to be, a great philanthropy thing, and it didn't happen. It's not any good. So, unfortunately, sometimes you do even, they come out okay because they got paid in US dollars to promote this. So they got their money even if it fails.
Do they know they're being used do they know there's helping to scam?
I want to say I think some of them do and they don't care. I want to say I think some got caught up in the hype of it, maybe. I think it's probably a little bit of both, honestly. You know, and I don't think Kim, like I'll say, I'm not a fan of Kardashians, but I don't think Kim Kardashian went into it with a malicious intent. I think she is what she is. She is just a self, you know, she goes out after any attempt she can to make a profit. She saw this, it was going well for other ones. She put her name to it, it failed, and she had paid. Now, she did get caught. She got paid to do it, but then she had to pay $1.26 million because they felt like, because she helped develop that coin, she was involved in the development of it, so they came back on her, like Jimmy Fallon was not involved in the development of that coin, so he just kind of got a knock on his reputation.
A rug pull is just a pump and dump.
Yeah.
It's nothing new under the sun, it's the new name for a
Yeah.
pump and dump. The time tested pump.
Same kind of like what happens with stocks, you know, you see it on the stock market a lot too.
Right.
Oh wait, I totally left out the impersonation scam, I'm sorry. So, that's where you get fake support accounts chased to see phrases online. So that's similar to like the tech support scam. If you put your question on a platform about a wallet issue, official support's gonna DM you within seconds, and they're gonna offer to help you if you give them your 12-word seed phrase, which is the same as giving up your password and account numbers to an online hacker. Deep fake giveaways. Scammers use AI to create fake videos of celebrities like Elon Musk or Vitalik Buterin. And I looked up who he is and why people would like listen to what this person said, even if it was fake AI. He is a Russian Canadian computer programmer who joined crypto early in its inception and became a billionaire from cryptocurrency. So that's why people are going to listen to him. They are not real celebrities. They have been modified by AI, which we're in. I've got a seminar of that, and some are about AI, the good and the bad of AI. That's the bad side of it. And what kind of they do is they send a claim. Hey, you know, if you send 0.1 Bitcoin to this address to verify your wallet so we can make sure everything's good, we're going to send you 0.2 back. You're going to double your money in Bitcoin. No. That's not going to happen. Your bank's not going to call you and say, we need to verify your account's good. If you send me $100 just so we can verify, then I'm going to send you $200 back. Cool? That doesn't happen. So no one is giving away free crypto the same way no one's giving away free money at the bank to help you. So I have here just the buzzwords that are used to confuse and control. And I think this one's on the table too. Liquidity mining, complex, high profit investment strategies that they want you to think it is. It's really a fake pool where your money's stolen immediately. Node verification is what's considered, they want you to think it's a security step, like two-factor authentication to sync your wallet to the blockchain. It's the trick to get you to enter your 12-word seed phrase so they can get your wallet and drain it in seconds. Gas fees, network tax. They want you to think it's the standard technical fee required by the blockchain. It's a ransom, a final attempt to steal more money before they go. So if they think you're off the hook, you know, for the taxes or whatever, this is one last attempt to try and get a little bit more money out of you. The smart contract audit, they send it to you. You think it's a certificate proving the platform is safe and unhackable, like you have the authentication certificates on websites and things like that. It's a fake PDF or graphic designed to build false trust. Fake. It's a fake authorization form. Airdrop allocation. It's a free gift of new tokens just for being a user. Now, some places may give you a free gift, but they're not going to give you free money. The bank's not going to give, they might give you a toaster, but they're going to give you free $500 for opening an account. It's phishing bank, a link that drains your wallet when you click claim, the same as this comes on websites, just on regular cyber hacking. Click here to claim your free gift, and they've got access to everything. So that, like, they may give you things, no one's going to give you free money. It doesn't happen. Red flag phrases to watch out for is one is the AI trading bot. That's our proprietary AI bot. Handles the trades, you get guaranteed 2% profit every day. That's the way they're trying to manipulate your thoughts on AI, thinking it's a positive thing to help them. There is no bot. They're typing in the numbers themselves at the call center, fooling you. Wallet synchronization. Your wallet's never out of sync. It never is. Please click this link and enter your recovery phrase. Don't ever link your wallet to anything or give your seed phrase to a website to someone you don't know, don't trust. It's just kind of like they put it giving the keys to your house and your safe combination. I also put it's the same as giving your bank account information out to someone. An institutional account upgrade. To withdraw your profits, you must first upgrade to a VIP account by depositing another $5,000. That's them making a last-ditch effort to get just some more money out of you before they go away. They'll tell you if you upgrade to the VIP account, you don't have to pay the service charge that you had to pay last time when you still didn't get your money out. And then the reality is real exchanges like Coinbase, Robinhood, and Kraken deduct fees from your existing balance. They never ask you for more money or just that you have free money. So they will actually take, and deduct it any legitimate fees from what you've already invested. They're not going to ask you to send money or fees on top of it. So just real quick, unsolicited contact, look out for that. Guaranteed returns, no legitimate investment can guarantee 10% daily or weekly returns. The urgency is the same as, if you get a phone call about it, this is moving, they just want to confuse you and upset you and just get you so flustered that you're just going to go out and just do what it takes to get in there to invest it. And then the withdrawal barriers are, again, you have to send them more money to get your money out of there. So a big deal on how to stay safe is to use cold storage. So if you have a large amount of crypto, you want to keep it in a hardware wallet like a Ledger or Trezor USB that isn't connected to the internet. I looked them up. They look kind of like this. It's a very high-tech USB. Some of them even have a little screen on them where you push the button and it calculates your crypto amount and how it's going and everything like that. So you can just look at it, in your hand, but it is off-site. The same way like I tell people to kind of store important documents on a USB in case your laptop or something breaks or gets hacked or something, you have your important documents on a USB offline storage. They're not connected to the internet. Enable two-factor authentication. Never do the SMS, like we're going to send the code to your phone to enter this in. Always use two-factor authentication in cryptocurrency for security. And again, just as I tell you in everything with the internet, verify the URL. Double check the website address. Double check it for extra dots, extra dashes, underscores, a misspelling. Bookmark your favorite exchanges, the same as like you would bookmark the websites that you go to a lot. Because if you just key it in, a lot of times you see like a sponsored site, even if it is the real site, it's got trackers and cookies attached to it, or you can go to a fake site. Never click links in emails, and always type the address yourself. That's kind of the same for crypto or just anything online. And if an investment guarantees returns, or a stranger on social media gives you wonderful insider tips of the kindness of their heart, it's a scam. Block them. Block them and report them. And I always say the same thing with this. Maybe they can't do anything. File a police report. You cover yourself for the future. That way, the same as if I tell you if your account is hacked or your identity is stolen, file a police report. They'll tell you, we can't do anything about it, that's fine. But if it comes up again, like if your disability account, workers' comp account or something has a false claim on it, you're covered. You reported it, so it's not going to come back on you. So always, always file a police report for anything. That covers you even if it can't help you in the moment. So now, we're going to move on to current, local, and regional scams. Good for me, not so good for you. There are 3 new ones that have popped up and rearing their ugly heads right here in the northern net. So I will say on that resource sheet, the AARP website has a really great feature, which is a scam map. You enter in your zip code and it tells you which scams are prevalent in your area at this time to look out for. So actually a really nice feature. So the first one, we've heard it before, it's rearing its ugly head again, is the unpaid tolls tax scam. I think probably everybody in this room has gotten one of them at some point or multiple of them. So one real easy way that you can find out that it's a scam is it comes from what looks like a European number. Like the +62 space 543, that it doesn't come from like a real area code number. So they're going to tell you that you owe an outstanding or overdue toll, must pay it immediately. You're gonna have late fees, penalties, or even legal action. The text may look legitimate. It may have the Easy Pass or state tolling site look real on the website, but again, just a little bit different there. If you kind of look at it, it's a little bit different. Some messages, this is how they've gotten better this time around. They will even include your vehicle information, model, license plate, or photo of the car. They can kind of get this information on public sites if they're real good about it. They can find out what kind of car you're driving. They can get into it. So, they often pull this information from public sites or previous data breaches. If you tap the link, you're taken to the fake website, asks you to pay now, enter your personal information, your bank account, or your credit card numbers, and you didn't actually have a toll, you didn't have an unpaid toll, they just stole your money. So, I get it, I don't even have an Easy Pass toll on my car, and I've gotten them. So if you get one, just block that email address, block that number on your phone, and if you do think, well, maybe I sped through a toll and maybe I hadn't re-upped the money on there, call the state agency and ask them to check your account.
What if it comes to the mail, which I got once?
I still would call them because unfortunately sometimes even things in the mail, they've gotten really good. And
I think I did call them.
yeah, I always say no matter
where they took the picture of the back of my car.
Yeah, but they can get that from other places where they can hack into it. I always say, even if it comes in the mail now.
I sent a check by mail, so I don't know if that's.
Hopefully it's good, but I don't know about the toll specifically, but I do do some things in the mail.
Yeah. I don't think they do that normally, the other than the face.
So again, the red flags to watch out for, you had no idea that you had an unpaid toll, you don't even have an account.
I did have Easy Pass, I just got it.
Mm-hmm.
No, I got it after that, that's right.
Okay.
So I said, I'm gonna get Easy Pass, which I never used.
So they'll have threatening language in there, license suspensions, to try and get you to act immediately, and just check to make sure the links to the place are legitimate. Look for like .xin, .exe, or misspellings in there. And if anything feels off, treat it as a scam. And honestly, as we know, probably about 95% of those from the tolls are scams. Unfortunately, they run rampant and they come back again. Again, just the general, don't click unsolicited links in text or emails, don't reply or call. Don't call the numbers that are sent to you either, because they're generally not the real numbers. Someone's going to answer on the other end and say they're from there, but they're not. So that's why I always say, hang up and initiate the call or the contact yourself, just to verify that you're safe. And if they get belligerent with you when you say, okay, thank you, I'm going to call you back, I'd like to call you back and verify this, they get belligerent with you on anything, Medicare, Social Security, your bank, whatever. If they get angry with you for wanting to call and verify, then you know it's a scam. A real person calling from that is going to understand that you want to make sure that you're being secure. So a new one here is jury duty QR code scams. So they come in the mail, they come on email, and they come by text. And if you're on Facebook at all, you will see the local sheriff's departments all around the country are posting these, warning people. So they're going to pose as court or law enforcement officials to thank you missed jury duty, you didn't show up, and you got to pay a fine and reveal your personal information to verify it's you there. And they will, threaten you with immediate arrest or anything like that because you missed jury duty. And again, they're using all three ways. These are actual ones that were pulled from different areas. The three different ways that it was sent out. They will receive messages saying you have a notice of a hearing because you missed jury duty. And for some reason, which I don't really understand, so let's look a little more into it, you'll get a traffic violation notice related to missing jury duty. So I looked into it and it says that kind of means they say you now face fines, arrests, and traffic violations. You must do payments in gift cards, Bitcoin, or QR code payment. I still am not real clear on why you're going to have a traffic violation if you missed jury duty, but it goes out like that. They will even send you a fake arrest warrant that they are coming for you. So, containing the QR code, that's where the scam is. You scan the QR code to pay the fine or to get you out of the arrest warrant, and that gives them, it's a malicious link, or either immediately gives them, it's malware, it gives them access to your accounts, or you scan the code and put in your information and give them access to your accounts that way. These QR codes, some of them go to sophisticated websites that mimic official government portal websites, and it's very hard to tell the difference. And they will steal your social security number, birthday, financial data, and that is how, more than just getting scammed, you get your identity stolen. Red flags here are the initial contact method. Federal courts always send jury summonses through the U.S. mail, not via phone calls, texts, or emails. Demand for immediate payment. Courts never demand immediate payment over the phone to avoid arrest. They never ask you to require with QR codes, cryptocurrency, gift cards, Google Play cards, prepaid debit cards, wire transfers, anything like that. And court officials are not going to ask you for your social security number, credit card details, or bank account over the phone or over text or email. And real law enforcement will not threaten to arrest you immediately if you hang up the phone. Again, hang up the phone, reach out to your local district, and if they say, if you hang up this phone, we're going to come, we're outside your door, we're going to arrest you now. They're not going to come. They're not, promise. Media, if you get one with the QR code, do not scan it at all. It can affect you in so many ways. Again, verify directly, call the official number for your local court or U.S. District Court, and then report the incident to the Federal Trade Commission, the FBI's Internet Crime Complaint Center, because if it comes through an email, it's an internet crime. Contact your local police department, sheriff's office, file a police report. They can't do anything for you, but it's on the record. And if you've already provided sensitive data, monitor your credit report. Go in, put a credit freeze on your reports. You do that through all three credit bureaus, and you can also put a notice for fraud alert on your account as well. That anything that goes through to check to get like a credit card or anything on your account, they have to contact you to verbally verify that it is you. So it is a fraud alert in addition to the freeze on your account, that anything that goes through they have to verbally get it verified from you. So this one, the third one, is fraudulent text messages and documents claiming you owe money for unpaid tolls and traffic violations. So here you have this lovely thing from the Commonwealth of Virginia. It looks very legitimate. You got a notice of hearing for a traffic violation. You're going to be in big trouble. It's got a QR code. Here, you can pay this. You don't have to show up for court. Well, judge is John Smith, and the clerk of the court is John Smith too. That's
small force.
Yeah, it really is. And they're not gonna put the QR code there for you to settle your own. But that's in Virginia. They're not that smart, because I've seen that a lot of them have this, in the areas that they do the same name, so that's a big dead giveaway. It's not the same person. Let's deal with both things. Virginia courts and government agencies do not send traffic hearing notices by text message. Do not scan the QR codes or click the links from unexpected messages. Again, it's malware. Don't provide payment information until you reach out and initiate a contact to verify. If you receive one of these, delete it, report it as spam. You get a text or on your phone, delete it, report it as spam. iPhone is really good about that now, putting things in spam. If you think it's a possibility, you might have not done it correctly, verify it directly yourself to find out what's going on, and they'll tell you if it's real or not. So that's the top three that are prevalent in this area. Just went over that, sorry. So just a little bit of a wrap up. I'd just like to always keep you guys reminded of the top 5 cyber crimes and scams. Text report. Something's wrong with your computer, you have a problem, give us remote access. They take complete control of your computer, and you are sitting there watching them in real time take over. take over everything, get your account information. There's nothing you can do because they have control of your laptop or your computer. Extortion, where scammers threaten to release private photos, videos, or personal information unless you pay a fee on that. They'll use fear and intimidation, like they hacked into your cloud or anything like that. I really don't worry about that because the most they're going to get are my cat's feet pictures. If they want to sell them for something, go ahead. Maybe you'll get something for her feet pictures. But, and generally, I've seen where people come, go ahead and release that picture. Go ahead. I don't care. I'm not worried about it. They'll back down that way. If you get belligerent back with them, they'll back down. A big one is the non-payment, non-delivery. I'm sure we've all had those text messages from FedEx, UPS, Postal Service, not really from them. Your package is up for delivery, but we can't verify your address. Click this link here to verify so we can actually deliver your package. Now here's where it gets confusing. If you use Amazon and you always got a package coming to you, go to the FedEx and USPS. USPS has verified delivery. FedEx, you can do an account. UPS, where you track it yourself. Close out of that. If you think you actually have a package, check where it's coming from first, and then go to the legitimate delivery site and check yourself. And again, that can be a little confusing if you do have a lot of packages coming to you. Another thing is the non-payment. If you sell something on Etsy or eBay or Shopify or something, they'll get the product and then they'll file false reports they didn't get it. And the oversight on Etsy and Shopify will make you will refund the money back to them and you're out of it. And unfortunately, some people do that. And that's a risk you take selling things like that. Personal data breach, where the hackers steal personal information, password, social security, credit card from legitimate websites and databases. A big one that happens all the time is Anthem and Verizon. They're always getting hacked. Always. It happens. So, and I can promise you, almost everybody's had their personal information out. I mean, unfortunately, it's very hard not to. Phishing is, again, the fake emails, texts, or messages that look official or trick you into giving personal information or clicking the malicious links. Your account's been compromised at the bank. You have a overdue, your credit card's way overdue. Anything like that, one wrong click, and they've got your identity, they got your password. So always, always, always get out of whatever you got and verify the information on your own before you do anything. Just a little bit of information here. It's a little eye-opening. Online scams are draining wallets fast. Last year in 2025, 173 million was lost via credit cards and checks. Check washing is a big thing in the mail. People that still write checks and pay bills through the mail, or especially at Christmas time, if you send checks to people for Christmas gifts, they will get intercepted and washed and then rewritten. Your signature still on there, rewritten to someone else in a different amount. So you're not even safe just doing a paper check.
Even if it's inside a card?
Yes, ma'am.
So,
yes. So unfortunately,
what does one do?
So, yeah.
Stole from me, right?
So unfortunately, especially like when it's really busy around Christmas time in some of the cities, if you watch the news, you see where postal workers get fed up and just dump bags of mail down ravines and stuff. And people will go in there and they will go through the mail and open the cards or open anything like that, and they will wash the checks. There is a way, there is a certain ink you can use. It's very hard to wash off, and there is a certain type of check you can pay a little bit extra for at the banks that has some kind of protection in it as well that makes it harder to do. Another thing, and if you do a credit freeze or to protect your account, a lot of people, you'll get like the pre-approved credit card offers in the mail, and those suck. Because they have all your information is there. All you gotta do is call, they basically have just sent a credit card, a fully functioning credit card almost through the mail. And people will intercept those and will, get the information, find the information from somewhere. And then you've got all these credit cards you had no idea you had with all these balances, and they're gonna come out for you to pay. So I will say I have my credit frozen. My identity was stolen through a disability unable to work claim after I had a car accident. It was stolen through the Virginia department there. It was an inside job. But, they found out because it was done twice, even after it was filed police report. But I put a credit freeze on everything, on all my accounts, so that, nothing, because I was getting things, oh, hey, you get this, once you get in it, it's hard to get out. You put the credit freeze on, you stop getting those pre-approved offers in the mail. They can't send them because they can't even do soft inquiries, which is what it's called. To be able to send it to you, you've got to freeze. They can't even do a soft inquiry. So you stop getting those, which is actually a big help, because a lot of people run into a lot of trouble. They never get them. People steal them and they use them for themselves. So here on this screen is the same thing as what's on the handout there, the resources, just the regular ones for identity theft, what to do, online scams and cybercrime, how to report those. Cryptocurrency scam resources is new. They have a new department there for crypto-related theft. So again, you're not going to get your money back, but it's a touch screen, so that's why we're going to change the slide. You won't get yours back, but it could help shut it down in the future. And what to do immediately: hang up, block the contact that has called you, especially if they're being belligerent, ugly, and nasty with you. Secure your accounts, change passwords immediately, and run your antivirus software. One thing, when the screens pop up, with the infected websites, it always says, do not shut your computer down. Whatever you do, I always tell people immediately, shut your computer down. Shut it down. Shut down. Hard shut down. First thing you do, bring it back up and run your Windows protection scan on that. Change passwords immediately. I've had some people come to me where they got their emails were involved in kind of a scam, and that people were saying, I'm getting emails from you with this scam, and they say, do I have to get a new email address? I tell them, before you do that, because that can be a hassle, go in, change your password, and change your password like twice a week for several weeks. They will eventually give up trying to get in there. If you continue to change your password, you need to remember what you changed it to, but if you change it multiple times a week for several weeks, that should get you back to where they've just given up on trying to use your email, at least, in the scam that's going on with that. Do not provide personal information or funds unless you verify yourself that it is legitimate. And monitor your credit, review your bank statement, review your credit reports. You have the right through annualcreditreport.com that has the access to all 3 credit bureaus. I believe now it's every 6 months, you have the right to 1 free credit report from each company. I think it's every 6 months now through there. A lot of credit cards, like Capital One, different ones, they have protection where if it's lost, you can just call them immediately and lock it. If you find it, you can unlock it, but that way, if it's lost, it doesn't get stolen. Again, if your identity is stolen, it's kind of a pain. You need to lock your credit down, you need to lock your checking account down, you need to file a police report, and you got to keep an eye on things. And one thing I tell people is very important. It happens to everybody. I've gone to seminars with law enforcement, FBI agents. It has happened to them. It has happened to me. It is scary. It is overwhelming, but if it happens, don't be embarrassed to ask for help. It happens to everyone. It's not your fault. It's so hard now to tell what's legitimate and what's not. So always ask for help and always take the immediate steps to protect yourself. And it may be a little bit of a pain in the future, but it's a lot better than having your identity and your social security and your credit cards and everything drained and used for other things. That's it. Thank you.
Thank you.
If you have any questions, are there any questions or?
On TV, they're starting to talk about titles of your home being scammed out or taken, and you find out you don't have a title to your house anymore.
Right.
What's that all about?
So I've heard about that. I do not know enough about that to answer it. I direct people to the bank. They can tell you, they give you good information. Like I know if you bank at Blue Ridge Bank up here, Chris Winstanley is in the scam department. She's very good to give you information on that. My understanding is you think and again, you think you're refinancing your home with someone, and so of course as you do with the loan, they hold the title until you pay it off, but they sell it. They sell the title. the title gets sold to someone else, and you don't know who has it. And you're paying this one company but they don't hold your title anymore because you're paying them, but then they've also sold your title to another company. That's my understanding of it, but again, I don't know enough to really wanna get into it, but Chris Winstanley, if you do bank there, she's excellent. She has a lot of that information. And I'd like to say too, if you're interested in cryptocurrency, I hope that helps you to understand it, but I don't know enough to like answer any questions about investing. I would say your bank, your wealth management, and your estate plan or anything like that, they are well versed in it, especially because they do it like stocks now. I just wanted to I had a lot of people ask me about it, so I just want to give a little bit of an explanation on what to watch out for. Anything else? Good? Okay, thank you.
Thank
you.